Hello, I'm Ken Carpenter, and this is Invest AI Savvy, where AI powers smart investing. Happy Friday, April 24th, 2026. Today's signal of the day is Riot, RIOT, a mid cap equity trading around $18.48. Well, but before we start, BuzzPulse is a social intelligence tool. Everything you hear today is data and not it's data and commentary. Okay, it's not investment advice. So I'm not your financial advisor. So please do your own research before putting any money anywhere. But Riot is Riot Platforms, a Bitcoin miner that just passed 10 independent quality gates in our Convergence engine. Here's what fired. BuzzSurge Z-score of 5.1, meaning social attention is more than 5 standard deviations above normal baseline levels. Momentum is confirmed and sentiment is at plus 0.39. Modestly bullish, but not euphoric. Short interest sits at 14% afloat, not squeeze territory, but enough to add fuel if this thing runs. And here's the kicker, the IV rank is 2%, so options are very cheap. When implied volatility sits at the second percentile of its annual range, and we're seeing unusual options activity that confirms the social directional bias. That's an asymmetric setup. You're buying lottery tickets at a discount while social attention is spiking. The convergence depth here is 10 signals. Buzz pulse, surge detection, confirmed momentum, sentiment analysis, options pricing dislocation, and flow confirmation, all pointing the same direction at the same time. That's not noise, that's signal. Now, Riot is riding the Bitcoin wave. Bitcoin dominance is at 58.1%, almost down a full percent in 24 hours, which means money is rotating into riskier crypto plays, and the miners get leveraged beta to that move. Now, let's talk about the macro backdrop because this is where the story gets interesting. The Strait of Hormuz remains effectively closed. The U.S. naval blockade of Iranian ports is now in its second week, and U.S. Central Command confirmed last night that 31 vessels, most of them oil tankers, have already been turned around. In Wednesday, on Wednesday, Iran's Revolutionary Guard attacked three commercial ships and seized two of them, including the container ship MSC Francesca, a fifth with 15 Filipino seafarers now being held in Iranian custody. Iranian state TV is publishing dramatic boarding footage. President Trump is responding by ordering the U.S. military to shoot and kill any Iranians or any Iranian boats with Iranians on them that are laying mines in the strait, while the Pentagon is intensifying mine clearing operations to reopen the waterway. Now, here's the scale of what's happening. The head of the International Energy Agency, Fatih Birol, called this the biggest energy security threat in history. 13 million barrels per day of oil supply have been disrupted. Companies are paying up to $4 million per slot to reroute ships through the Panama Canal. Tokyo is telling office workers to wear shorts to cut air conditioning load. This is a real, ongoing global commodity shock. The, pri- the peace talks are happening, but they're stalled. The April 11th round in Islamabad ended without an agreement, and the U.S. Iran ceasefire was just extended by President Trump on Thursday. But Mr. Trump explicitly told reporters there's no time pressure and no time frame on ending this war. Iranian officials are calling the naval blockade itself a violation of the ceasefire, which means we should expect more headline volatility, not less. Now, what does this matter for our signal? Oil prices are climbing overnight on the Iran stalemate. Stock futures are red, but crypto miners are decoupled from equity beta right now because the underlying asset, Bitcoin, is behaving independently. Bitcoin sentiment on Lunar Crush is sitting at 79% positive, with institutional buying from BlackRock and MicroStrategy named as the top supportive themes. The narrative that Iran could accept Bitcoin for oil payments is also gaining attention as a secondary tailwind. Now, geopolitical chaos that hurts equities historically helps non sovereign stores of value, and Bitcoin is the largest non sovereign asset on earth. The play here is simple. If Bitcoin continues pushing and dominance keeps falling, Riot gets double leverage as both a miner and a speculative vehicle. The cheap options and confirmed social serve give you a defined risk way to play that thesis without chasing spot price. Now, what to watch? If Bitcoin reverses or dominance spikes back above 59%, this setup loses its foundation. And if IV rank climbs above 10%, the options advantage evaporates. Right now, those conditions aren't present. The signal is live. Let's move to the supporting signals ranked by alpha potential. Number one is CXAI. Stock ticker, no cap tier classification, trading at 18 cents. Agreed score of 0.475. Z score 12.3. That's the second highest in today's entire data set. Momentum is confirmed. Sentiment plus 0.56 bullish. The catalyst is real. A cloud, a Google Cloud director publicly endorsed CXAI's API first data layer approach and AI powered conversational analytics as a differentiated enterprise solution. That's not paid promotion, that's organic validation from a big tech insider. When a Z score hits 12 and you have a named endorsement from Google Cloud infrastructure leadership, you're watching a discovery signal in real time. 18 cents is penny stock territory, so position sizing matters, but the convergence here is clean. Now, number two is IBIT, stock ticker IBIT, trading at $44.75. Greed score 0.475. Z score 10.1 with confirmed momentum. Sentiment plus 0.47. The catalyst is indirect but powerful. Positive sentiment around the Bitcoin rally is bleeding into Bitcoin linked ETF. Now, IBIT is BlackRock's spot Bitcoin ETF. So it's not a miner, it's a wrapper around the actual asset. So when Bitcoin moves and social attention spikes, sentiment score shows the crowd is leaning bullish, but not irrationally so. This is a cleaner way to play Bitcoin exposure than spot if you want equity market liquidity and no wallet risk. And in a world where the Strait of Hormuz is closed and oil is spiking, an SEC registered Bitcoin wrapper held at BlackRock starts to look very attractive to institutional desks that want crypto exposure without operational headaches. Now, number three is Mara, MARA, or Marathon Digital. Now, Mara is a mid cap equity trading at $11.84. Agreed score of 0.462 and a Z score of 5.6, momentum confirmed. Sentiment is barely positive at plus 0.09. Short interest is 38%, and Now we're in legitimate squeeze territory. IV rank at 3% and options are cheap. Mara is another Bitcoin miner, so it shares the same macro driver as Riot. Falling Bitcoin dominance and rising price and rising spot price. The difference is leverage. Riot has 14% short interest. Mara has 38%. If Bitcoin grinds higher and the miner trade catches a bid, Mara has nearly 3 times the squeeze fuel of Riot. That's a higher beta vehicle for the same underlying thesis. The options market hasn't priced in any of this. The IB rank at 3% means you can construct a defined risk position at near historic lows. Pair Riot and Mara together, and you've got a Bitcoin miner basket with two different short interest profiles riding the same macro setup. Now, that's the three supporting signals today, all bullish, all confirmed by independent convergence. Tie it together, the geopolitical risk is loud. Oil is spiking, equities are cautious, and Bitcoin is quietly absorbing flows from people who want a non sovereign asset, while two of the world's largest militaries face off in the Persian Gulf. The miners are the leveraged equity expression of that thesis. CXAI is a separate AI discovery story driven by a Google Cloud endorsement. IBIT is the institutional wrapper. Riot and Mara are the leveraged plays. 5 stickers, one coherent setup. I'm Ken Carpenter. This is Invest AI Savvy, and that's the way it is.